What's up, everyone? All right, well, finishing the week here in the green. This week was much better than last week. I still had a no trade day. I didn't take any trades on Monday, but was green Tuesday, Wednesday, Thursday, and Friday. And I would wager that my accuracy was pretty solid these last 4 days. I felt like I was doing pretty well. Today, IMMX was a good winner, and MDXH was the other decent winner. So, and I traded also TXMD. So I had 3 stocks I traded today, green on all 3. Commissions are certainly going to be higher on IMMX because it's a cheaper stock, traded with larger share size. So, my commissions are going to be higher today, which I don't love, but it's just part of the deal. So, we're definitely in a bear market here. I think on Monday or Tuesday next week, I'll do a special morning show where I'll teach a mini lesson and then we'll do some trading. And the topic will be on how to trade through a bear market. Because that's what I'm doing. I mean, that's what we're all doing right now. And, I've had some good weeks. I've had some bad weeks. Last week I was red. I finished down $10,000. I was green on Monday and Tuesday, but only made like $2,000. And then I lost 12, 13,000, whatever it was on Wednesday, maybe 14 with commissions. And then no trades on Thursday and only made 300 on Friday. So it was a red week. But then this week bounced back. Green Tuesday, Wednesday, Thursday, Friday. And I'm not sure what I'm up exactly, but it's over 20,000. Maybe it's almost 30, 25, 28. So it's been a great week, all things considered, and certainly made up for what I lost, made back what I lost last week, which is good. And now we're coming into the last full week of the month of May, next week. All right. So the game plan for the week ahead is to stay sharp and to stay super focused and to stay disciplined, because this is a bear market. The gains are not coming easily. You cannot let your guard down right now. You've got to be super disciplined about getting in, getting out, not trying to hit home runs, just base hit, base hit, base hit, base hit. And so that's what I'm doing. I'm showing up every day. I'm trying to hit base hits. I'm trying to prevent myself from having unnecessary losses. So I hope you guys enjoyed the recap. As always, if you have questions or comments, leave them down below, and I'll be back at it on Monday morning, and you may see me pop up on live over the weekend. If I see some good questions that people throw, down in the comments, maybe I'll come on and do a little Q&A and answer some questions on Saturday or Sunday. So maybe I'll see you over the weekend, but if not, I'll definitely see you on Monday morning. Enjoy the recap. Remember, as always, trading is risky and my results are not typical. There is no guarantee for success, whether you learn from me or you're trading on your own. So please be careful, be mindful, and practice a simulator before you put real money on the line. All right, enjoy the recap. All right, so we're gonna do a recap here, go over the trades from today. It's Friday at the end of the week, so got through this week. Boy, it's been a little tough being patient right now. This has not been the same market that we were in a year ago or even 2 years ago. It's been quite a lot slower, but there have been opportunities. They're just fewer and further between. I was able to find some opportunities today, and I'm finishing at $8,909.44, which is a good day. I'll remind everyone, as always, that my results are not typical. I've been trading for a long time, so you shouldn't expect to achieve a result like that. And in fact, I would encourage you to practice in a simulator before you put real money on the line, because trading is, of course, risky. And we are in a bear market here, so this is a time to be more conservative, just to try to hit those base hits and get out. I haven't had, I guess I had a $14,000 day on Tuesday, but generally, I'm seeing smaller green days. I'm not hitting, $30,000, $40,000, $50,000 days or $100,000 days like I was when the market was hot. So I'm grinding on smaller numbers right now, and I can, I sort of know what I need to be hitting, what I need to be averaging to feel like I'm, it's worth, trading or whatever. And it's like $5,000 a day. So if I can be hitting 5,000 a day, that has me averaging $1 million a year, and I can feel really good about that. That's fine. If I was averaging only 1,000 or 2,000 a day, that would, for me, start to feel pretty tough, because of course in the last 2 years I was averaging closer to 20,000 a day. So But 5,000 is fine. And a day like today at 8,900, this is a good day. This is absolutely a solid green day. I can be really happy about it. So let's go over the trades from this morning. First trade today was actually on MDXH. But on my first trade, I lost 20 bucks on it. So this stock at the time was our leading gapper, and it ended up being a gapper of about 13%, but it was our leading gapper right at this point here. We didn't have a very good gap scanner, but it was our leading gapper. And it initially had a spread of $9 by 15. Then it was 9 by 13. Then it dropped down and it was $8 by 9.29. And when the spread tightened up, I started to see some green on the tape. And I thought, well, you know what? I'll give this a chance. And I tried to buy 1,000 shares at 9.29. I filled only 240 shares. It then pops up to 10.50. I added at 11, 250 shares. So if I'd had a full 1,000, I would have probably doubled to 2,000. Since I only got 241, I doubled to 491 total, adding 250 shares. I didn't want to, add and then screw up my cost basis. So I doubled my position at about 11, and it went up to a high of 11.89, but I didn't take profit off the table because even then I only had, whatever it was, 400 shares. So I thought, well, let's just see how this bases out. Maybe I can add back to the position or scale into a full size position if it goes up to, 12, 13, 14, 15. And it didn't, and it came back down, and I stopped out break even for a $20 loss. So more or less break even, which is fine. So that's where I finished pre-market. And then after the bell, the 9:30 opening bell, it ripped up right here, and I jumped in, sort of chased the middle of this candle, adding here, and it squeezed up to 97. I took some profit. On resumption, we got a dip and a rip up to 11. And on those trades right there, I ended up making almost 5,000. So those were the trades that I did well on. All right, so that was at the open. That was a little bit later in the morning. All right, so that was my first trade that was minus 20. And then the second trade was on IMMX. IMMX popped up right here at exactly, what was that? I guess it was like 8:45, 8:48. It was kind of a funny time, actually. But anyways, it pops up here, and I jumped in the middle of this candle here at about 225 average. So right around here, 225. This actually forms a micro pullback right here. And you might not really realize it, but this is actually a classic micro pullback setup on the 1 minute chart. If we look at this on a 10-second chart, what you'll see is it popped up to 25, $2.25. It pulled back, and then it broke through that 225 spot. That was your opportunity to be a buyer. So, and that was where I was a buyer right there as it broke through here. So that was a micro pullback. Got up to 25.35 and then up to a high of 61. Pulls back here and then rallies back up. But this one ended up having some real resistance up in the 60s. It was not able to break out in a clean or smooth way. Not even close. I was up 7,000 on it and gave back like, $3,000 off the top. So, and I gave back the biggest chunk on, was it this trade here? No, I think it was actually this trade here. I think it was this one here. I took 30,000 shares and lost like $3,000. I tried it on this trade, but with smaller size. And then I missed this one, of course. Isn't that annoying? That's what I was looking for, but I was looking for it. Well, first I thought it was going to happen here, and then I tried it here, and then I tried it here, and then I lost on it here. I lost on it here, and I was like, you know what? I'm done with it. And then it goes. Isn't that typical? So what a choppy stock. So I said after that, I shut down. I was like, you know what? I'm frustrated. I'm annoyed. I'm done. So whatever. Anyways, so that was IMMX, 3,700 bucks on that one. Then after that was when I took the trade on MDXH. So MDXH, this was the trade for the break of VWAP right here, or it was after I took the $3,000 loss, I jumped into that trade. And then the last trade was on TXMD. TXMD, this one, I traded it for the break of 3. It's like right in here. Oh, excuse me. So it ended up going a little higher, but anyways, first pullback, second pullback, decent setups. It didn't really feel comfortable sizing up for it, so I didn't take big size. And then that was my last trade. So yeah, that's kind of where I finished the day. A good day, but kind of, you know, on MDXH early, I got only 250 shares filled or whatever of that order, and it's, you know, squeezed up pretty nicely. So that was kind of a bummer. Ended up just losing 20 bucks on it. IMMX, that one was kind of choppy. So, you know, not super easy stuff there. I have my my P&L here for the month of May, which I thought we could look at just at a high level. I'm not really caring to look too closely at exactly where I sit on the month. So I'm actually not even gonna look at that screen. I'm gonna look at this one over here because the numbers are too small. This is on my broadcast. So, so I know that I was red on this day here. This was a disappointing day. That was the day I shorted the S&P 500 and took a good size loss. And of course the market was at the lows by the end of the day, whatever. Didn't trade on Thursday, one small trade on Friday, didn't trade on Monday. So basically I shouldn't have traded at all on this day. I didn't trade Thursday, and I shouldn't have traded Friday, and I didn't trade Monday. So that should have been 4 no trade days in a row, which would have set a record. I mean, that doesn't happen to me. And then I came back and traded on Tuesday, did well. Wednesday did well. Thursday did well, and now Friday I'm doing okay. So, you know, I'm in okay shape. I mean, of course, I wish I hadn't had that one bigger red day, but all things considered, I'm in pretty good shape. And we've been in a bear market. So this is how you trade in a bear market. You get green, you trade less. The frequency, the total number of trades, I mean, you can see my trading has been quite a bit less, except for on this day back here, where we had some good opportunities, and on Wednesday here. Those 2 days I was a bit more aggressive, and a little bit on this day here. And that was a day I ended up probably, you could say, over trading. But in any case, you know, bear market means the market's a little colder, so you got to be super disciplined. Get in, get green, get out. Don't overstay your welcome. Don't push your luck. So, you know, and you know, pretty quick, we're going to be at the end of the month. We've got the holiday for Memorial Day on Monday the 30th. So we've got next week 5 more days, and then Tuesday the 31st. And then just like that, it's June, the month of June, and we're coming into the summer, June, July, and August. Typically, June, July, August, and September are slower for me. So since it's been a little slow this year already, I'm not sure what, you know, is going to be in store for the summer. But at the same time, the market's been quite bearish, and I've still been able to, you know, find opportunities and carve out a little bit of profit, and I'll continue with that same focus through the summer months. And, you know, some people who make a lot of money, maybe they will just say, all right, I'm going to take the whole summer off. I've never done that. I have a hard time imagining doing that because I like to be in the market every day. I like to stay sharp. I like to know what's moving. And the fact is, I've never been able to consistently show that I would make more money if I didn't trade all summer long. I always have made money. I mean, for all these years I've been trading, I've not, like, maybe except for like my first couple of years, you know, since I turned the corner, I consistently make money at all times of the year. I make more at some times and less at other times, but I still make money. So it doesn't, to me, make sense to, you know, sell in May and go away for my strategy. I've got to be here, you know, churning, you know, these small days, day after day after day. 4,000 or 5,000 a day, that's $1 million a year, and I need to keep coming in and doing it. If I miss 3 months of 5,000 a day, you know, that's going to cost me. That's going to cost me hundreds of thousands of dollars. So I need to keep showing up, and I will. So we've got June right around the corner, and then we'll see what July and August have for us. But right now, I would say this week has actually been better than last week. You know, last week was pretty bad, but this week has been better. So I'm happy for that, and I'll be back at it on Monday morning, and hopefully we can get next week off to a good start. All right, so that's it for me. Thank you guys for tuning in as always. And for those that are watching this over the weekend, if you didn't already check out the 2 new videos that I uploaded this week, I've got a new video on price action, which is right there. You guys should check that out. And I have a new video on the truth behind high frequency trading algorithms and market makers, what institutional traders don't want you to know. So check out those 2 videos right there, and I'll see you guys back here on Monday morning. Reminder as always, trading is risky and my results are not typical, and there is no guarantee of success whether you learn from me or you're on your own. So take it slow.